Good evening. Today is August 21st, 2019. My name is Oluwale Okabola, Spartacus Trading Corporation, where serious advanced traders come to train and learn. Here to bring you the recap of today's trade, which is for the 21st, and also provide a prep report for tomorrow New York pit session being the 22nd. This is for the S&P E-mini contract, and I am your E-mini specialist. Here we go. Today should be a quick, easy recap. Sorry that I did not provide a pre market update. I got in late this morning. Nevertheless, here we go. Just two references I was paying attention to coming into today. The weekly open. Basically, let me bring the weekly chart for you. Here's the weekly open. This is a weekly bar chart. Reason why I was paying to the weekly open, well, this is where we close today. Disregard that. Whether or not we're up or down for the week, very, very simple logic. So that's why I have the weekly open. The market opened, and as you can see from the price action, could not really find acceptance below the weekly open until late in the day. We had the Fed minutes coming out today. That could explain why the market was in such a compact balance area, let's say. And also, we have the Fed chair speaking on Friday at 10. I think it's at Jackson Hole. I could be wrong. But and nevertheless, he's speaking at 10, so maybe the market's just trying to set itself up. But coming into today, I mean, yeah, today's trade, the pit session, the overnight, as you can see, was long. We had a double distribution here and a one tick double distribution, which you'll appreciate it more. Okay, here's the second double distribution that was filled. So we had one double distribution, we had a second double distribution from the overnight. Basically, that signals a new auction to the upside. Nothing changes unless this double distribution is filled. The second one was filled, but the first one was not. Market open, we had clearly higher value. We trade value, not price. We use value as a gauge. So today it was pretty readable as far as what was going on in the market. Nevertheless, the market balanced for a while. We had what profile theory calls a firecracker. Basically, these shorts were shorting from a reference level in and around the overnight high. That created nothing but stops up above, starting from K when K tried to break and could not take out J. These shorts, who were still holding on to their trade, was in trouble. As the market was getting nearing the close, they had to cover. More than likely, they were day time frame traders. They had to cover their position, could not take out the J low, one of the market's classic head fake. And you see what happened. We had a short covering rally, and the market closed all the way in and closed on the high. So that's basically what happened today. Now, let's get into the nitty gritty for tomorrow. All right, monthly bar chart. One time framing down 1 month, nothing has changed. The monthly is usually the slowest thing that has changed that changes as the market's doing whatever it wants to do. We're into the weekly. Again, we're still in this. Well, let's start with the trend. We're one time framing up 2 weeks. This low has not taken out the previous week. This week's low has not taken out last week's low. So we're one time framing up, although we're in a multi week, a 4 week, 3 week, 2 week balance area. Okay, something to pay attention to. Another thing, as far as with the bar chart, I talked about the weekly open. At the end of the day, we want to know whether or not we are up or down for the week. Right now, we're not that far above the weekly open. If we continue to trade higher and take out the weekly high, what we're leaving behind is an excess low, then the next target is last week's high, and I need to mark that on my chart because if we take out last week's high at some point this week, we are time framing higher. Also, if you remember from the recap video from a prior week, I think it was Monday or Tuesday's recap video, I talked about the importance of the market being able to fill the gap. Let me show you. Stand by. Okay. I talked about, and you can go back and review the video for the 19th, the 20th. I think it's the 20th. The video from the 20th. I talked about the importance of, well, basically the meaning of being able to fill this gap or not fill this gap. And here's the gap fill. Yesterday being Tuesday, the market tried very hard to fill this gap and could not. Fill the gap in the overnight, but that really doesn't count. You need to fill it in the pit. And the market rallied up, and we're, of course, higher for today. So this gap still exists. If the market cannot fill this gap by the end of the week, that means we got an auction still going to the upside. So something you want to keep in mind as you are trying to get yourself on the right side of the market. Back to the bar chart. So here we are on the weekly. On the bar chart, it masks exactly what's going on versus the profile, which gives you a heck of a lot more detail. That's why I like the profile. But I still use the bar charts as well. You got to use both. So, nevertheless, we want to monitor if the tomorrow can we take out the current weekly high, and if we do, can we get some continuation to take out last week's high? That's what we want to pay attention to. Okay. Also, a thing of note: this chart might be a little bit confusing because of all the lines. I got my notes for a reason. But the thing I wanted you to know that we are trading above all the halfbacks. The 4 week halfback right here, this green line, the August halfback, basically just looking at August thus far, the halfway mark of August, you take the high and the low divided by 2, simple math. We are trading above the August halfback. It's important because this is a monthly reference. The 4 week halfback, 1, 2, 3, 4. Take the high, the low divided by 2, get you the 4 week halfback. We are trading above the 4 week halfback. We are trading above the 2 week halfback and the 3 week halfback. Sorry. So basically, all this is telling me is that on a halfback, basically the halfway mark between this multi week balance, we're above the halfway mark on the entire 4 week balance, the entire 3 week balance, the entire 2 week balance. Just something as a gauge to see kind of where the market is developing and where is it trying to head. And also, if there's a problem, we're going to start to take those halfbacks out because we're not trading that far above the 4 week halfback. As you can see right here, if there's a problem with the current trajectory of the market going up, trading above these multi-week halfbacks, the first indication of an issue is we are trading and value is developing below this 4 week halfback. Very simple. All right, we're on the daily bar. Nothing much to talk about on the daily. We're one time framing up 1 day. So what do we got? We're time framing higher. Well, we're time framing lower on the monthly, just 1 month. Although we're above this August halfback, something to keep in mind. Could be some sign of change. We're time framing higher on the weekly, so the trend is up. We're one time framing higher on the daily. Also keep in mind, we have not filled the gap for the week. So basically everything is pointing up. Now for the nuances. Although the market is trading up, closed on its high, there's a bit of a divergence. Um, we have a point of control that is 12 wide. If we can't get acceptance above yet, today's high was after midnight, so we can now say yesterday's high, the 21st high. If we cannot get acceptance above this high, and acceptance for me is value developing above this high, more than likely we we'll get some liquidation to come. We have an anomaly here, not a big deal, but we're 12 wide here. Come back and revisit this point of control. Also, keep in mind the overnight inventory that has been long, 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 long. You can see the overnight filled the gap, and once it filled the gap from the overnight, we have traded longer. Although this double distribution here negates anything to the downside until it's filled. Okay, so what am I saying? If we cannot get acceptance above the 21st, which would be Wednesday's high, if we cannot get acceptance above Wednesday's high, more than likely the market is going to trade down, revisit this point of control that's 12 wide, and then we also can get further liquidation to correct this inventory that is still long, long from the overnight, long from the day time, the pit session. Also, they plays right into what I talked about, the two main references I'm paying attention to: the current week's high, current week's open. If we get acceptance above, we're above the current week's high, we're establishing a new current week high, go with trade. If we are getting a liquidation, the rubber meets the road at the weekly open. If we begin to get some acceptance down below this weekly open, then we got some more action to the downside. You want to watch where value is developing. You also want to watch the nature of the overnight inventory coming into tomorrow's pit session. Tomorrow's the overnight and pre-market inventory will basically kind of spell out what the market wants to do. If overnight inventory is higher, proposing a gap, we need to hold that gap. So tomorrow could be a very tricky day, but with this information should help keep you grounded as far as what direction you want to trade. If you want to trade to the upside for continuation, what do you want to see? One time frame and higher. If you're fading any higher price and you take a short, whether if it's a short from the current, if the market comes back within the current last week's high, not last week, but the current weekly high, you want to see, because at the moment you're probably shorting higher value. You want to see one time frame and suspending value. Also, well, the market opens somewhere in here, okay, and takes out the weekly open. What you want to see for continuation? One time framing lower. So tomorrow should be a readable day, somewhat tricky because of the inventory conditions going into today. Into, well, yes, today, because we are the 22nd now. So hopefully this information helps. Um, this is Olawale Okabola, Spartacus Trading Corporation, where serious advanced traders come to train and learn. And bring home those profits tomorrow, everybody. Talk to you later.